Hello, traders and investors. Steve Gans coming to you from Kauai, Hawaii. So, going through the weekend update. So, the week was actually a pretty significant up week. If we come over here and take a look at this move, I mean that's a fairly significant 1 week move with a big gap up even here in the middle. So, pretty powerful up move right into where I had expected we would come, which I was thinking was going to be some form of potential resistance. Now, it may still be some resistance. It did pop above 5,500 going into the close on Friday, which is a bit of a bullish signal. But as we'll see in a moment when we look at SPY, it was done on significantly lower volume. So again, we'll have to see how that holds up at the end of the day. So let's just walk through our indexes. Right now, I feel like we should be in a little bit of a resistance zone here. If we do pop much above this 55.25 or so where we're at right now, I think we could easily, move up right here to this 57.50 range would be the next area of what I would consider to be significant resistance. So that said, of course, news is going to, pardon the pun, trump anything here in that if some sort of news comes out, we are a heavily news-driven market right now. So we take a look at the SPY, and of course, it's going to look exactly like SPX. No real significance there. We can see a little bit down here if we take a look at the volume. If I can enlarge this window here, the volume is pretty low on Thursday and Friday. So while we did have up days, the volume was off a fair amount. So that's kind of I don't want to say a bearish sign, but that takes a little bit of steam out of the bullish case, the fact that would be so low. Now, we look at the VIX. Well, the fact that the VIX is falling off here and falling off fairly fast leans us back to the bullish side. So again, really kind of mixed where we're at right now. Had a very hard run in all of the major indexes for the week. Again, same thing here in the Qs, significant move up, and also into a bit of a resistance area here. So we're going to have to see how this is all handled here this next week. The volatility on the Qs also has dropped off quite a bit. And then we look at IWM. IWM, or the Russell, was actually showing even a little bit more resistance here. The Russell here did not punch above the highs that it had made on Wednesday or Thursday. So the Russell, at least right here, is maybe even lagging a little bit. And then if we look at volatility on the Russell, we can see that its volatility, my internet connection here is a little bit slower. The volatility on Russell did not fall off quite as much. So again, that leads us a little bit more into that bearish case. Now, another item I wanted to take a look at was a couple of key economic reports that have recently come out. And these are leading me down a bearish path over the next few months. The reason for that, if we look at the Consumer Sentiment Index, it is almost as low as it was back during COVID here, and it's going down quite rapidly. In addition to that, if we look at the 5 to 10-year inflation expectations, those are really hitting some high numbers, highest since 1991. This is from University of Michigan, which produces some of these standard economic reports. So both of those are leading me down a little bit of a bearish path over the coming months. Now, right now, I'd have to say I'm a little more to the neutral side, but a few months down the road, I think definitely leaning toward the bearish side based on what everything that is being shared with us right now. Even though tariffs have been curtailed back, there's no doubt that if they remain in place, it is going to have an impact on the costs that we pay for pretty much everything. And of course, that's what is driving these particular expectations. So that's kind of where I'm at as far as looking at our markets here. this weekend. This is April 27th, 2025, and my expectations going forward. Now, for those of you that are part of the alert service, I closed out one butterfly trade on, I believe that was Thursday, for about a 10% profit over a period of about a week. So that was a nice trade. It was a simple get in, wait for some decay to happen, get out. It was a shorter term butterfly. And right now I am finding that some of these shorter term butterflies are actually working a little bit better. If you want to know more about the alert service and how that works, I'm going to put some information down at the bottom of the screen here so you can go to that URL and see more about it. It's where I share the trades that I'm getting into. I share a video explanation of each one of those trades as to why I'm entering it, if I'm adjusting it, and how I'm adjusting it, and of course, when I go to exit it. Now, 3 trades that are open there right now. This trade, which had started as also a short-term butterfly, and then I needed to adjust that to the upside as our market moved up on Friday. So this butterfly, I calendarized a portion of it, giving me this configuration, basically widening out my upside so that if the market stays in this elevated position, this will still develop some decay. This blue line here is what's called the T0 line. As that decays, that's how profit comes into this trade. And when that gets into that 10-15% profit range, which I would expect to happen here this next week, I'll go ahead and look at closing that out. This particular trade is a longer term trade that started as a butterfly, but it's been in place for 32 days. So it rode that massive move down we had in the market and then the pretty sizable move back up. This is getting stressed a bit right now. But the break even on this is all the way up here at this 5,700 area. And I don't know that I see our markets getting back up there in the next 2 months. I feel personally like we're kind of stalling out here where we're at. And then we should start to see a little bit of a pullback. When we get that pullback, I'm going to look at coming in and potentially selling a put spread to basically bring more potential decay and premium into this trade. So I did not adjust this for further upside move last week again because my personal opinion is that I think we might be exhausting that up move. Now I could totally be wrong on that, and if this market continues higher on Monday or Tuesday, I'm going to have to come up with a plan B on this, which will likely be turning this into a butterfly configuration of some type. And then I have this long-term trade here on Lucid Auto. I was hoping that this would be a little more elevated by now. I've been in this trade 62 days. I do think that Lucid has a decent future, but this is one of those trades that is it's a pretty high risk. By high risk, I mean that it's not a large dollar amount. I haven't risked a big dollar amount on this, but it's a high probability of it not panning out. But if it does pan out, the reward could be very, very significant because Lucid is trading around $2.50. So, and I bought a long call here for about $1.50 or something in that range. So if Lucid does start to take off and this does start to move up, I'm thinking this could be in like a Tesla mode or something like that, where this could easily go from the call being worth $1.50, $2 up to maybe $10, $15, $20, somewhere in that range over the next year. So that's what I'm potentially looking for on this. And I've got another 2 years on it. So I can wait it out a little longer, but I won't wait it out too long. If we get another couple months down the road and they've introduced their new vehicle, their SUV called the Gravity, and it's still not moving this stock price up significantly over the next couple months, I will probably think about going ahead and pulling the plug on that. And then in addition to that, I will be looking to get into some new trades here over the next week. Specifically, my favorite trade is a butterfly trade. That's what I'll be focusing on. And it will probably at this stage be another shorter term butterfly because those seem to be what are working so well right now. I do have a deep dive butterfly class. It's over 10 hours on butterflies. It gets into why those trades are better when the volatility is higher, how you get a better reward to risk ratio if you get the right entry. I actually have a 15-minute video that's a free video that explains the 7 key reasons why I personally like the butterfly as my go-to trade for income. And you can get that free video, check it out, see what you think of it. If it is of interest to you, you can go from there to actually purchasing the butterfly course if you feel that this is the right trading style for you. So with that, I'm going to wrap things up, everyone. Take care, and we'll see you next weekend for the update.